FX Nation, what's up, guys? Welcome back to the channel. Welcome back to another video. And guys, in this video, I'm going to talk about something very specific, and that is, can you trade with market makers without using any indicators? Okay, so without using ADRs, TDIs, moving averages, any of that stuff, right? Can you trade with market makers without any indicators? Okay. So stay tuned and we're going to take a look at this, guys. Let's go. All right, guys. So that's the question for today's video is, can you or can you not trade with market makers without any indicators? You know, I get a lot of questions about why you haven't done videos on ADR or TDI, or how come you're not using ADRs or TDIs or anything like that. And the simple answer is this, okay? You don't need any of that shit to trade in line with the market maker, okay? You don't need any of that stuff. The only thing that you ever need, all right, to put on your chart is literally the dividing of the days. Okay, so if you're in TradingView, you just right click, you go into settings, time zones and sessions, and put in the session breaks. That's it. And it puts these lines, and it's lets you know when a new day starts. That's literally the only thing that you need. Okay? You don't need any moving averages. You don't need TDI. You don't need ADR, pivot points, all this other shit. You don't need. Okay, you don't need. Let's look at some pairs from some setups from today. Okay, and we're not going to use any kind of moving averages or anything like that. We're just simply going to look at price, and we're going to use the day stamps here from the beginning to the end to guide us. Okay, because at the end of the day, if you know the market structure, and you know, if you think like a big bank, if you think like them and stop thinking like a retail trader, then you can trade with them. Okay, so stop thinking like a retail trader. Stop thinking like the 90% of other traders. Okay, why do you think there's such a big a number that they throw out there, that 90 to 95%, whatever that number is, of traders fail within the first 90 days of trying to trade, and they blow through 90% of their account? Okay, it's because they go through and they follow what 90% of the other traders are learning. Okay? Everybody's learning the same crap. Okay? Everybody's learning the same stuff. And you wonder why you have such a big percentage of traders that are losing. It's because they're all learning the same thing. All right. If you want to do something different, if you want to be part of the 5-10%, whatever the percentage is of people who are successful, then you need to do the opposite of what the 90 to 95% of the traders do. Okay. So the sooner that you realize that, and the sooner that you stop thinking like a retail trader and start thinking like a big bank, think like a big bank. How would a big bank like to trade against a retail trader? When would they, make the false move? When would they make the stop hunts? Okay, these are things that you should start to think about, and stop thinking about everything else that you thought you knew about trading the market. All right. So without further ado, guys, let's take a look at some charts here, and we'll go over some of the setups that were during London and also US session. All right, so let's go. So here's the pound USD, okay? And let's break this down. So here are the markers for the day. Okay? If you take everything away, okay, and the only thing that you have is you just draw your Asian box, okay, what is it that you see? You have your Asian range here, okay, and then after the Asian range, what are we doing? We're waiting for them to make their move, right? Either high or low, whatever it is. Okay, in this case, they went up high at 415, 430, 445. They issued railroad tracks right here, and then they dropped for the rest of the day. Now, do I need a moving average to tell me that? Do I need a TDI to tell me that? Do I need an ADR to tell me that? Do I need any other freaking indicator to tell me, to visually see what's going on? Okay? And if you can't see it, here it is on the line chart. Same thing. Okay? So your trade, what's your trade? Your trade is this entire block here. Okay? And if you're smart, you probably would have gotten out at this right here, right around 6:45 or so, and you would have been done for the day. Okay? So what's the trade? This particular trade is about 60 pips, depending on where you got in and out of. And you didn't need any indicators to tell you when to trade it. You just need to look and identify what pattern you're trading. Okay? That's the only thing that matters. The pattern, can you identify the pattern that's happening, whether it's a type 1, type 2, or type 3 pattern? Okay, what time is it happening at? Okay, and that's it. Those are the two biggest things that you need. All right, let's look at pound Swiss. What do we have here in pound Swiss? Asian range. After the Asian range, they made their stop hunt high, and then they dropped for the rest of the session. That's all they did. Okay. What did we get as a confirmation to that? We got here a quarter wood. Okay. What's a quarter wood? 4 bars straight across like this. Okay. And if you don't see it, switch over to the line chart, and what do you see? Can you see an M here? Okay. Can you see the M here? All right. And then you drop, and that's it. That was 91 pips today. Okay. Am I using any indicators? Am I using any moving average, TDIs, or any of that shit? No. You don't need it. Okay. They're just tools to help you, but you don't need any of it. Okay. They're just extra tools that you can use to help you trade. But at the end of the day, you don't need any of it. Okay? Here's pound JPY. Here's pound JPY. What did pound JPY do? Here's the Asian range here. Okay? Price is basically moving. Goes up to the top, comes down, comes right back up to retest that high, and drops. Okay, so what is this? A type 2 setup because we're pinning to the high of Asia. Okay, it ends here in a railroad track, and there's your trade. The first half of the trade was 66 pips. Second half would have been 97 to 100 pips, depending on where you got in and out at. Okay? And if you need help, switch over to the line chart like I did in the previous video that I showed you, that can you trade with a line chart, and you'll see the pattern. It's the same thing. You'll see it there. Okay? You'll see it there. It doesn't matter which chart you use, whether it's a Hikinachi chart, a bar chart, or a line chart. It's all the same. It's just done, and it shows you in a different way, right? So here are your spikes to the high, spikes to the high, spikes to the high, and then your drop, But it's the same thing. This one gave you railroad tracks here on the second leg, and then you drop. Pound CAD, what did we get? Asian range, stop hunt high, railroad tracks, drop. I mean, that can't get any simpler than that. That's another 78 pips, 80 pips. Okay. Pound NZD. What did we get? Asian range, stop hunt high, railroad tracks, drop. $155 pips. At no time in frame did you ever need any kind of indicators to tell you what you're looking at. Okay? At no time did you need any of that. So what's EuroCAD here? EuroCAD had a bunch of stuff. All right, can you see what's going on here? Let's do this. Let's replay it from the end of Asia. Okay? And matter of fact, let's switch it over to the line chart to see if you can see it or not. Can you see the W? Yes. Right? There's one trade there. Can you see the M? The hits to the middle of the Asian range. Here's the middle of the Asian range here, right? You saw the W go up to the middle of the range. That's one trade. Okay? That's 20 pips up to the middle of the range. Remember, the candles are actually hitting the middle of the range. Okay? And then what do you see? So you get this. You get that. Right back. Boom. Okay? And then what do you get again? Can you see the W? Okay? There's your other trade here. There's another 40 pips. So, do you get what I'm saying? Are you starting to see what I'm talking about? Okay? Because here you're looking at a total of 1, 2, 3 trades all in the same pair. Back to back to back. Right? So, you're looking at 20 pips here, and then you're looking at another 25 pips here, and then you're looking at another 40 pips here. So around 70 pips on one pair. Just trading it back and forth. Can you see the trade set up on this one? I know you probably see the easy one, right? You'll see this. Right? That's not the one I'm talking about. Here's the one that I'm talking about here. Boom. Okay. Middle of the range, price. After the range, after the Asian session, comes down, comes back up, retest that middle of the range, and then we move away from it. So right at 4 o'clock, we move away from it, boom, there's your first trade. Okay? Second trade is going to be your W. Back into consolidation. Okay, so 30 pips. and 36 pips. So 2 trades. Okay. Did you need any indicators for that? No. AUD Swiss. Do you see it? If you don't see it, do you see it now? Asian range, stop on high, reverse drop. There's your trade. Okay. So there you go. There's your trade. 21, 25 pips depending on where you got in and out at. Pound AUD, Asian range, stop on high, railroad track, drop. There's 105 pips. Can you see the M? So what I'm trying to show you guys is that the most important thing is, can you see the pattern? Can you see the pattern, and can you see what time it produces it at? Okay. And if you don't know what time I'm talking about, I made a video called Trading in the Zone, and I'll link it up here in the corner so that way you can go take a look at it. But that video tells you what the trading zone is for each type of setup that we're looking for. So type 1, type 2, type 3. It'll tell you the range, the trading zone range of where we want those setups to be at. Okay. But with these setups here, you don't need any kind of indicator. You don't need any of that stuff. Okay. Those are just extra things that you can use, but you don't have to use any of it. As long as you understand market structure, and as long as you understand what they are doing, what the big banks are doing, the movement that they make. Okay. Euro JPY. What is Euro JPY doing? Do you see what they're doing? Here's yesterday's previous high. Okay. What are they doing here? Came up, came down, came up, and dropped. A double session M formation pays off. Okay. Where could you have gotten in on this at? I mean, you could have gotten in on this really early, right? But technically, if you wanted to wait until the end of the session, you had railroad tracks right here, right at 215. Okay. Euro Swiss, right out of the gate, trading on the edge. First leg came down, second leg railroad track, drop. There goes 40 pips. Euro pound, Asian range, stop hunt low, rise. Go to the line chart. Can you see the W? Okay. USD JPY, Asian range, stop hunt low, retest up. You have 2 trades here, a W and an M. You need help seeing it? Can you see it now? Can you see the W here and then the M? That's it. That's all you're looking for, guys. Don't make this harder than it has to be. Don't get stuck and suckered into making trading decisions based on indicators. Make sure that you make all of your decisions based on what you are seeing from the charts, based on what price action is telling you. Okay? Be as picky as you want. I don't care if you only caught 3 of these trades. Okay? But if they're the cleanest M's and W's, or if they're the cleanest type 1, type 2, type 3 setups, that's all that matters. Okay? So I don't care if you caught 1 or all of them. The important thing is, were you picky enough, all right, to pick and choose the best possible one, best possible trade setup that your eyes saw happen. Okay? Because it may be easy for me to see it, but sometimes it's pretty hard for you to see it. So if you can't see it, it doesn't matter what I see. And if you want to get better at seeing it as it's happening, there's only one way I know how, and that's to backtest and replay this sucker for a year back. Okay? You want to train your mind to see this in live as it's happening? Go take any euro and pound chart and go back a year in time on the 15-minute chart and replay that whole year. I guarantee you, if you do that, you'll train your mind how to do it, and there's no second guessing on whether or not you'll see it or not. But it's up to you if you actually want to do the work to learn it and stop trying to find an easy way to do it, because there is no easy way. You have to go through it. NZDJPY. Asian range, stop hunt low, stop hunt low, stop hunt low, go back up to the middle of the range, drop. Okay. How many times did they come and hit this low? 1, 2, 3. 3 hits to the low, rise to the middle of the range, come right back down. NZD Swiss. Asian range here, stop hunt high, come down, accumulate, go back up, retest, and drop. Okay, these are the trades right here. These should be very easy for you to pick up and see. CAD Swiss. Can you see the M? Asian range, stop hunt high, accumulate, retest again, go up a little higher, convince people to go long, and then you go short. Okay? I mean, you can see this happening. You can see the convincing that they have to do right here. Remember that these candles all started blue. They ended red, blue. Blue was all the way up here and ended red. As soon as they had accumulated enough people going long, they go short. USD Swiss. Asian range. Go stop hunt high. See that? Go stop hunt high. Accumulate more people. Get them to go long one more time. And then drop away. If you went all the way down, it's 30 pips. NZD USD. You have your Asian range here. What do they do after the Asian range? They go hit low 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Whole bunch right here. This is all the accumulation phase that market makers do. Okay? And they spent all of London doing it. Okay, it wasn't until 11:45 during the US session that they accumulated enough contracts for them to make the next move that they wanted to. Okay, so they had you in suspense from 3 in the morning all the way to 11:45 in the morning. You have to understand that one advantage that they have over you is the fact that time is no question for them. They don't care about time. You, on the other hand, you as a retail trader, you as a human being care a lot about time, because you can't sit here from 3 in the morning all the way till 11:30 in the morning watching this happen. Okay? They don't live under those rules. They don't live under those same rules that we as retail traders live by, right? They don't have to take their kids to school in the morning. They don't have to get ready to go to work in the morning. They don't have to do errands in the morning. They don't have to do any of that stuff. They don't care any of that stuff about that. Okay, that doesn't exist to them. So they can take as much time as they want to do this. And this right here is what drives you crazy with your psychology. If you get stuck in this. Okay? If you get stuck in this, it drives you crazy. Alright? But just be aware of what they do is the important aspect of it. And finally, AUD NZD. Asian range. Fake to the high. We have a type 2 setup here because we're at the Asian high. We accumulate, go back up to retest it, and you see right here, remember this bar, just look, this bar started red all the way down, came all the way back up and pushed, next bar started, came back all the way up and pushed, blue, solid blue when it started. Okay, how many people do you think went long on that? And then they took it all away real quick. As soon as they accumulate enough traders going long, then they go short. It's very simple to them. Okay, so you need to keep it just as simple. You need to wait for them to go stop hunting first before you trade with them. Okay? So let them go stop hunting first. Alright? There's going to be trades like this where you might miss. Okay? Because you let them do what they were going to do, okay, and you thought possibly that this would have been a W, when you just need to make sure that you're looking at the bigger picture as well. But either way, okay, if you miss this trade, so what? There were 20 others, 13 others that you could have traded. So what if you miss this trade? Because there's no way I can tell you that you're going to trade all these different, pairs at one time. Right? You just don't have the capital to do that. Most of you don't. Right? So you don't have the capital to trade all these pairs. Because, I just went over how many pairs? Over 15 pairs. You're going to be bummed out over one pair? Let's be real. Who cares? You missed it, so what? Go find another one. You know? So the answer to the question, do you need indicators to trade with big banks, with market makers? No, you don't need it. They're just extra tools that you can use. The simpler you keep this, the easier it's going to be for you. The more you complicate it with adding stuff to it, the more complicated it becomes for you to make a decision. Okay? Because at the end of the day, having TDIs, ADRs, moving averages, they're not going to draw out M's and W's. They're not going to draw the pattern for you. Okay? The candlesticks is what draws the pattern for you. Okay? The line chart is what draws the pattern for you. The question is, can you see it or can you not see it? If you can't see it, you need to go back a year on the 15-minute chart and replay that sucker for a year. And if you don't know how to do that, click the link on the top right corner to the video where I show you how to do that. Okay? But that's all there is to the game, guys. It's just pure price action. You put in your time dividers here to split the days for you, and you go to work. Just box out the Asian range, let them do the stop hunt, reverse and drop, or stop hunt low and rise. Okay? Remember, the simplicity of it is that all you're trying to do is you're trying to trade off of the high or the low of the day. That is it. That's the whole game point of doing this. Okay? Is that you're trying to trade off the high or the low of the day. That's it. That's all you're doing. Alright? Guys, I hope this video helped you out tremendously. Let me know in the comments if it did. Thank you guys for taking the time to watch this video. I really appreciate it. Guys, if you think other people would benefit from watching this, please share the video. Like the video, guys. If you haven't signed up for the free membership, go to fxntrading.com. Sign up for the free membership. We'll give you a free trading plan, template, a journal so you can journal all your trades. You'll have access to books and files, everything that you could ever need. If you need mentoring, guys, there's only a couple more spots. You can go to fxntrading.com and sign up for that as well. Again, thank you guys and have a great night. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntrading.com. Once again, guys, thank you so much. I'm truly blessed.